Welcome everyone, and thank you so much for joining yet another keynote. We are excited to have with us here today, James Tabron. James Tabron has a topic of why Black professionals should be blitzing the tech startup industry. A little bit about James. James is a senior manager at Twilio, and through the majority of James's career, he has helped companies to mature their security posture through governance, risk management, and compliance. James is also actively involved in helping tech companies increase their diversity, inclusion, and belonging efforts by starting employee resource groups and building relationships with people operation teams and joining external organizations with this focus. Without further ado, ladies and gentlemen, I present to you James Tabron.
I'm going to share my screen now. All right. Gina, thank you so much for such a wonderful introduction. It's a pleasure to be here. I'm just so grateful to be able to talk to so many people about this topic that I am extremely passionate about. First, I want to start off by saying that there are a lot of wealth generating opportunities that Black Americans have been excluded from. I'm just highlighting these two because one, I believe that they're two of the biggest and that there are some similarities. But I would like to ask all of you to take a moment to think about other wealth generating opportunities that Black Americans have been excluded from in this country's history. And feel free to put that in the chat. I really want to just take a minute to give you all an opportunity to post that, engage with the rest of the people in this session, and just post some of those wealth generating opportunities that you feel we're not going to talk about today, but should be mentioned. All right, we got some filing in here. Let's see. Oh yeah. Real estate, redlining, right, Chris? Absolutely. Oh, gaming. Oh yeah. Keep it coming. Yeah. Bitcoin, you can kind of see where this conversation kind of leads into that a little bit. But I'll give us a few more seconds to let a little bit more of these come in. And if for some reason you can't see my screen on my presentation, somebody please let me know. Okay. Perfect. Federal money, awesome. Absolutely. Okay, so before we dive into this presentation, I want you all to close your eyes for a moment, and I want you to imagine a guy named Tom. Just imagine a guy named Tom. Now I want you to imagine that Tom is a billionaire. And then I want you to imagine the type of lifestyle that Tom could have as a billionaire and what Tom might do with $1 billion. Okay. Now this is just up to your imagination. Now, some of you might be imagining Tom riding in yachts on lakes or in the Mediterranean Sea, in Santorini, Greece, spending a bunch of money, eating great food, and able to take his friends wherever they want to go around the world, lavish trips and things of that nature. And some of you might have imagined that Tom would be more of a philanthropist, right? That Tom would have so many organizations that would be able to be lifted up and empowered by the financial resources that Tom would be able to provide. So as a billionaire, you can just imagine the type of lifestyle Tom wanted to have. And I'm going to tell you how Tom became a billionaire. It's a crazy story. You might not believe it, but I'm going to dive into it. I promise you, before the end of this presentation, I'm going to tell you how Tom became a billionaire. But before we do that, I want to talk a little bit about my career journey and how I came to be so passionate about this topic. So first off, 2003, I graduated from Indiana University. So I'm a Hoosier, grew up in Indiana, and I bleed crimson and cream. Love basketball. Football team is now really good. So if you ever want to talk Indiana University, basketball, football, anything, if we have any alums in the crowd, I'll be happy to chat with you. I love Indiana University. After my stint at Indiana University, I did an internship at State Farm, and then I worked at a small engineering company and a part of their IT shop. But I consider my first real gig, like I was really in corporate America when I joined Deloitte in 2007. And I worked in Deloitte's IT shop and did that for about 7 years until I decided I wanted to specialize in information security. And when I decided to do that, I left Deloitte and I joined the Baylor College of Medicine in Houston, Texas. And I was there for a couple of years. And at the time, my wonderful wife was finishing up her doctoral program, and she received an offer to join the University of Denver as a professor. So we had some decisions to make. And she and I decided we would move to Denver and participate in that opportunity. And I noticed something when I started looking for jobs in the Denver market. I noticed that this one company just seemed to be very different from all of the other companies who were looking for someone with my skills and background. And I was fortunate enough to be able to be in a position where I could kind of choose which company I wanted to work for. But I noticed that this company, SendGrid, was just completely different. I fell in love with the values on their website, how quick the application process was, and how quick everything moved. And I want to stay on this experience here for a moment, because it is truly the experience that changed my life. And it is the genesis of how I became to be so passionate about this topic. And I want to talk about this experience in what I would call the 3 F's. Okay, so the first F, it was fast, okay? Hiring moved fast. I mean, everything was just so agile. I was in the pipeline for different companies at the same time. They just couldn't move fast enough to acquire top talent. This company was nimble and able to do that. And I was just so impressed. And when I joined the company, I noticed, even from a software delivery standpoint, that everything was just moving really fast. We were able to get products out to our customers at a very quick rate, which allowed us to win in the market, right? And change happened really quickly and efficiently. So this next F is family. The atmosphere felt so much like family. It was a relatively small company when I joined. We would call it a tech startup. It was about 150 people. And we were a cohesive unit, a cohesive group. We had good leadership, and it really helped me transition from Houston to Denver because it felt so much like family. Everyone was so helpful, and we were all marching towards the same goals. And those goals were to grow this company to one day we could be in a place where we could take this company public. And that was just a fantastic feeling. And the last F that kind of characterizes this experience is fun. It was just so much fun to work at this small company Everybody is, really helpful, highly intelligent, highly engaged at the company. In fact, every year we took a trip, the entire company took a trip to Mexico on the company's dime to realign on what our goals would be for the year. But we had a lot of fun, and there were always these social events and a very laid back atmosphere. It was just fantastic. So it was during this experience that in my first year there, I was with my teammates at the time, and they told me about this event in Boulder. And we went up to Boulder, and what that event was Techstars demo night. At the time, I had no idea what Techstars demo night, but I had never been to Boulder before, and we made a nice trip of it. And it was just a lot of fun. And Techstars is, if you're not completely sure what a tech startup accelerator is, that's what Techstars is. Techstars is an accelerator, which is an organization that is created by experienced tech entrepreneurs to help early stage tech companies develop their product, hone their business model, and most importantly, connect with investors. And I remember lining up to attend this event, was really excited. We get in, and we're all inside of this, large theater, and it kind of looked like this. We were in the theater, and all of these companies, very early stage startups, were basically demonstrating to the world what they had been working on, the business that they had been building, and the product that they were prepared to launch to the public to shake up the world, disrupt the industry that their product was going to be delivered into. And it was just really fascinating and exciting getting to see some of these early stage companies before anybody really knows who they are, and getting a chance to see their product before anybody else really gets to see it. At the end of each of these companies' presentation, I noticed that during the photo that was shared at the end of the staff, the company, it was relatively small, sometimes 9, 10, 11, 12 people. I'm lucky if you got 20 at that point. But I noticed that in each of these photos, there was something that stood out to me. I noticed that in these photos, there was nobody in these companies that looked like me. Nobody. In fact, it looked a lot like this photo, right? And that's when a light went off in my head that Black professionals were being excluded from yet another wealth generating opportunity. I'm going to talk a little bit about this first opportunity. So for many people who don't know, first oil boom happened around 1901, and it was in Texas, right? Now think about this opportunity here that we were excluded from. Now between 1900 and 1940, Texas's GDP grew from $3.7 billion to $267 billion. In 40 years, that is a large jump in a state's gross domestic product. And it can be really easy to see that with Jim Crow laws being instituted in 1877 and the world's largest reserve of oil, let me say that again. The world's largest reserve of oil was discovered in Texas in 1901. And those Jim Crow laws were enforced until 1965. So it can be really easy to see how Black Americans would have been systematically and even legally prohibited from owning the land that the oil was discovered on. Very difficult to start any businesses that would be able to support the Chevrons and Amicos and all of these other huge companies that we know today that can find their roots in this oil boom that took place. So even being able to start companies to support the workers or supply, be a part of the supply chain for these companies would have been next to impossible in the Jim Crow South during this time. And all the wealth that was generated during this time, we were excluded from. In fact, I'm not sure if many people know that in 2005, there was another oil boom in North Dakota. In 2005, North Dakota produced 36 million barrels of oil a year. Contrast that by 2012, 237 million barrels. Now, I wonder how many of us knew that 90% of oil drilling occurs on private land. So I'm going to ask, this is a time for us to chat a little bit. How many people on this call own or know somebody that owns private land? And I'm not talking about owns their home. I'm talking about private land, acre or more land in this country. And feel free to put that in the chat. You can wave your hand, put a +1, whatever it is. Nice. Wonderful. Okay. So we've got some people talking about, some people do, some people don't. Let's get deep in here now. Okay. All right. All right. Check it out. 1% of American rural land is owned by African Americans. I'm going to say that one more time. Only 1% of American rural land is owned by African Americans. This is probably where some shock and outrage should set in. Because when you contrast that with this figure, that 98% of American rural land is owned by white Americans. This is shocking to me. And I believe that there are many of you out there that this is shocking to as well. So one can see how it would be nearly impossible for Black Americans to hit the oil lottery that many white Americans were able to enjoy. And when I say oil lottery, I mean the number of taxpayers that reported adjusted gross income of more than $1 million in North Dakota nearly tripled during this 7-year span. Nearly tripled during this 7-year span. And there are so many other figures. When I researched this oil boom in North Dakota, so much money was generated during this oil boom, during this period. And so many people who just own land found themselves wealthy or in the position to start building wealth just because maybe their grandparents passed down some land and they got lucky. So now I'm going to go into this example of another wealth generating opportunity that I think is really important. So we all know these companies, very popular. We kind of call these companies like the big five of tech. I discovered that in 2020, the 5 big tech companies generated almost $900 billion in revenue combined. Let's put that in perspective. That rivals the GDP of countries like Saudi Arabia and the Netherlands. That is a lot of money. In fact, big tech has eclipsed big oil and other major industry groups to comprise the most valuable publicly traded companies in the world. In the world. By continuing to grow, these companies have strengthened the financial position of their billionaire founders and led the tech-heavy NASDAQ to new record highs. So I want to ask you all a question. What do these big tech companies have in common? Now, this is a question that I'm actually going to answer for you. They were all startups at one point, right? They were all startups at one point. And some of us on this call are probably old enough to remember when there was no Amazon, when there was no Facebook, right? When there was no Google. They were all startups at one point. So this is where we really get into the meat and potatoes of why I am here today. This is the fun part for me, because I get to tell you something that I don't think a lot of people really understand or know that is happening every day all around us. I want to talk to you about how many tech company founders and employees are getting rich. The first way I'll do this is by talking about what are called incentive stock options, or ISOs. So I'll just refer to them as ISOs going forward, okay? So an incentive stock option is a corporate benefit that gives an employee the right to buy shares of a company at a discounted price. Okay, that's really important. It's offered by some companies to encourage employees to remain long-term with a company and contribute to its growth and development and to the subsequent rise in its stock price. There's usually what we call a 4-year vesting period with a 1-year cliff. And we'll talk a little bit about that as well. Now, what is a strike price and why does it matter? Okay, so I'm going to talk to you a little bit about ISOs. All right. When you join a tech startup before it goes public, before it is a publicly traded company on the New York Stock Exchange or any other stock exchange in the world, that company is a private company. And they're going to offer you a salary. Hopefully it's outstanding. They usually are. Tech companies usually pay really good salaries. But they're also going to, along with that offer letter, they're also going to offer you what are called incentive stock options, or ISOs. Now, if you don't know anything about these, any number they tell you is probably going to sound really good. But at the time you're offered these, they're worth zilch. They are not worth a thing. They're not worth a thing. They are an incentive to try to kind of dangle a carrot, but also motivate you to work really hard so that those ISOs are one day worth something. And when I talked in the beginning about family marching towards the same direction, it was often that we would discuss making those ISOs worth something. That's always looming over our heads when we're in a tech startup. We want all of those incentive stock options to be worth something one day. So the company has to perform well and grow and hit its major metrics so that it can be the type of company that can go public at some point while you're there. That is most certainly the goal. And so at every stage of a company, even before it is publicly traded, it still has a value. It still people will still say, oh, we've put this much money into it. We think the company is probably worth this much. So at that point, each of those outstanding ISOs is actually valued at a certain price or the strike price. So company's not publicly traded. It's kind of all kind of speculation at that point. But the earlier you get into the company, the lower your strike price is. And if you see here in the first point, it says that these are the right to buy shares of a company at a discounted price. So that strike price is important because that is what you will actually pay to exercise the option to purchase a share of stock once the company goes public and it's actually worth something. Okay. So let me give you just a little bit of an example. All right. Let's say you were lucky. You got in at the company when the strike price for each incentive stock option was just $1. Okay. Now, people who have been in the company early, there's a saying, oh, that person has a sub-1 strike price. So they're really blessed that they've been with the company for a long time as well. But that is a good place to be. But if you are able to get a $1 strike price, that is amazing. Let's say the company, you've been working there, company's performing. I mean, it's kicking butt. Everybody's marching towards the same direction. At that point, CEO starts talking about, hey, we think we might be able to go public around this time, but we've got to hit these major points. We've got to accomplish these things. We've got to get these things in place. Everybody starts to get really excited. It is a wonderful event. It's a wonderful event. I was a part of something like this, and people who were there at the company really early, actually, I wasn't one of them, actually were able to travel to the New York Stock Exchange with all of our executive team. And they were able to be on the floor of the New York Stock Exchange when our CEO rang the opening bell. It's just an amazing experience. So let's just say the day goes public. You look up at the ticker and your company is trading at $20 a share. The initial thought is all of those incentive stock options that they kept throwing at me at every performance review, right? Every year they were throwing these incentive stock options at me. They weren't worth anything at the time. The immediate thought is they're actually worth something now. And you only have to pay $1 for what the rest of the world will pay $20 for. So let's just say you were able to amass 10,000 of these ISOs, and all you did was just go to work every day. That's it. Perform well, you didn't get fired, you didn't leave, you believed in the company, you had a great time doing it, and you were able to amass 10,000 of these stock options. They're now trading at $20 per share. Your strike price is $1. So that strike, you can use the price of the share now to cover that $1. You don't have to present $10,000 to get this. You can say, oh, it's worth $20. I'll just take 19, right? Take my dollar out. And I'm pretty sure some people have already started doing the math. All I did was work there. And I take that $19, because I take the 20 minus the 1 from my strike price. That's what it cost me. I multiply that by how many ISOs I actually have. I now have, in value, increased my net worth by $190,000. And the interesting thing is that things like this are happening every day. But let's just say you want the $190,000, you exercise the options. Now, there are tax implications which are well beyond the scope of this conversation, but you're still going to have a lot of money, a lot more than what you started with. So we'll give it another example. Still got that $1 strike price. Your strike price does not change. Whenever you came into the company, That's going to be the price that you pay for that to exercise the option to purchase that share of the company for as long as you have those incentive stock options. Your strike price remains the same. So let's just say company performed really well. You didn't sell one option. You just stayed with the company. The company performed really well. And then the company got acquired by one of those larger companies that I spoke to you about in the beginning. Now, you're actually seeing that the stock is trading at $200 per share. $200 per share. You still got those 10,000 stock options. You guessed it. You do the math on that, and you are now a multimillionaire. You are now a multimillionaire. This is happening all the time. Happening all the time. Now, I would love for someone to go and tell me, and we can put this in the chat. Someone tell me, what is the current price per share for each of these companies? Who's going to be the first to look it up? Yep. Got Apple. Oh, yeah, Netflix. I want people to imagine. I remember when Netflix came out. Yeah, I would have loved to have been working at Netflix or Google. I mean, you look at what Google and Amazon, you look at what they're trading at, and can you imagine the numbers? Can you imagine the numbers that I just presented to you? If you were there early enough, like at Amazon or Google, if you were there early enough, if you knew about these companies, if you were in the know about these companies early enough to join these companies. And the interesting thing is that when you join these companies early enough and they become as big as they are, your experience becomes so valuable. It's so valuable. You talk about generating wealth. I mean, outside of just being able to participate in incentive stock options, the things that you learn at a company that blows up like Amazon and Google or Facebook, when you go work other places, you're a part of the C-suite. I mean, that's just how this works. And I'm telling you that. In fact, the company that I work for, Twilio, the CEO was a product manager at Amazon, right? So the things that you learn there and the respect and your presence, what you've learned, your background has become so valuable that you can consult and make more money that way. You can command a high salary. And so these are the things that I want to highlight today, but I want to actually highlight more. There's something called restricted stock units, or what we call RSUs. So if you remember, ISOs were if what your company would give you to incentivize you to stay with the company before the company goes public in its IPO. Restricted stock units are what you get after the company goes public. And the restricted stock units are a form of compensation issued by an employer to an employee in the form of company shares. So now you know the company is already worth something. There's no guessing what the value of the company will be at that point. It's already trading publicly. So each stock unit has a value assigned to it, at least on that day or in that moment anyway. Now, these are issued to an employee through a vesting plan and distribution schedule after achieving required performance milestones or upon remaining with their employer for a particular length of time. Now, unlike stock options, which may expire worthless, and that is the risk with incentive stock options. I wouldn't be right if I didn't tell you that ISOs have risk. What is the risk? Well, that the company doesn't go public, right? Not every company goes public. I'm not here to tell you that every company goes public. It doesn't. Some companies dissolve, some companies get acquired, some companies merge into other companies, things of that nature. Some companies just fail, right? But I would like for you all to have a chance. And that's why I'm here, right? And so when we talk about restricted stock units, they work a little bit different. So company, you're going to get your salary, your offer letter. And in that offer letter, they're going to tell you that along with your salary, let's just say, and this number isn't too far-fetched, but let's just say they say, we're going to give you, depending on the level of the role, your background and your experience, let's just say that they tell you, we're also going to give you $1 million in restricted stock units. I'm not pulling that number out of nowhere, okay? It's a very realistic number, depending on your level. Now, I'm not saying that if you're fresh out of college that they're going to give you $1 million in restricted stock units, but they will give you some, even if you're fresh out of college. And it's going to be a lot more than you had when you came into the company, right? And so the restricted stock units, the way they work is, so you've got a million restricted stock units. They're telling you that. Now, these will vest over a 4-year period, okay? These will vest over a 4-year period. And let's just say the time that they offer you these restricted stock units, the stock is trading at $100 per share. So what that means is that breaks down into them giving you 10,000 restricted stock units. I didn't realize that would be so hard to say. So the way this works is you don't have anything for the first year. You're just waiting for your first year to anniversary to come and for you to vest. The way that works is they're going to give you a fourth of those restricted stock units in the after the first year. I'm just going to start calling them RSUs. And that's going to be worth $250,000 in stock after the first year. Now, the interesting thing about this number that I'm giving you is they're giving you the RSUs based on what the stock was trading for a year ago. And they're committing to giving you that many. So they would give you basically 2,500 shares of stock your first year. That is, or could potentially change after a year. So I want you to imagine actually that over the course of the year, the price per share is now 200. They're still going to give you the same amount of stock they committed. So basically what I'm saying to you is that over that year, the value of the stock that they're giving you actually could double or triple. It goes up, or of course, it could go down. But they're still going to give you the amount of shares that would equal out to a fourth of the 10,000 restricted stock units. Now, the interesting thing about these is this is kind of like a bonus, right? So after 1 year, you're going to get like a $250,000 bonus. But they still got, this is over 4 years, right? The way this works is they're going to take every quarter. Think about this. Every quarter, they're going to give you $62,500 in stock. Every quarter for the next 3 years. I want that to sink in for a moment. And this is not in place of your salary. You're still going to make your salary. Now, if you've never sold stock, bought stock, or participated in this at all, these stock units, as soon as they drop into your account, you can sell them. You're going to link your bank account to that equity account, and that money will be in your account within a week, every quarter for 3 years. And I want to add on top of that, every year you perform, they're going to give you more. They're going to give you more of these RSUs based on your performance. For as long as you're with the company, you'll be making money every quarter like this. Every quarter like this. I want that to sink in. This is happening every day. Every day. People all around you. But what's the problem? The problem is that African Americans have lacked access to the tech industry for decades. Decades. Either as employees or as founders. Collectively, we are being excluded from another great opportunity to generate billions of dollars of wealth. This is why I'm here today. Quite frankly, there are not enough Black professionals in the tech industry as a whole. It's even smaller when you start talking about tech startups. Not enough. So, when you see this number, what comes to mind for you? Feel free to put this in the chat as well. We'll take just about 30 seconds. When you see 1%, what comes to mind? Yeah. Okay. Only 1% of venture capital funded startup founders are Black. That's the bigger problem. That is the bigger problem. We're being excluded from this industry, so we can't learn how the industry works. We can't build the networks. We can't acquire the skills and the basic foundational understanding of what it takes to thrive and survive in the tech world as a founder or as a company. So many of us use the technologies that are built by these companies every day, yet we can't participate in the wealth that is being generated. How big is this problem? It's big. If you look at the numbers here, and these are some of your more major tech companies, and I assure you that you go into the tech startup industry, it's way worse than some of these bigger companies. The bigger companies struggle, the tech startup companies struggle as well with this. But we only represent, if you look across the line here, probably 4% on average of the demographics of these companies, right? And it's even worse when you get into leadership at these companies. 2% of the leadership in these companies that I just showed you is Black professionals. 2%. So that reduces the likelihood that Black professionals will be in a situation or a position where they're able to get those large amount of incentive stock options, that they're able to get a large amount of restricted stock units. I'll tell you a story. When I was working at SendGrid, we hired a senior vice president of sales, and this person was not a Black professional, but came in at the right time, right before we're about to go public. And that's another thing about working in this industry is You build relationships with people. They go off to join other tech companies. Because once you go to tech, you usually stay in the, because you start learning the logos and the other companies, and you start building the network. And when your networks grow and expand, people tell you, hey, I'm working at another company that is potentially about to go public. We're looking for a product manager. We're looking for someone to work in sales. You apply for that position, and if you get in at the right time, you can be really lucky. I remember when I was working at SingGrid, a lot of our sales team left to go to Zoom before Zoom went public. A large amount of our sales team left to go to Zoom before it went public. It was a time where Zoom was just starting to take off, just starting to take off. And a lot of those people don't have to work anymore. They got in early enough before they went public, and you saw Zoom stock is just through the roof. But we had a senior vice president of sales that came in and just kind of helped us get over the hump. Now, when the company goes public, for the Security Exchange Commission, so the SEC, the company has to release some documentation that talk about the salaries of their executive team and how many shares they have, things of that nature. When this document was released, I discovered after reading through it, because I was quite curious how much our executive team made every year. Our senior vice president of sales only made $85,000 a year. You're talking about senior vice president of sales, like $85,000 is a fantastic salary. But at another company, this person could probably command $300,000 to $400,000, maybe even more a year, right? But I noticed that this person's salary was $85,000 a year, but they were given a lot of incentive stock options, thousands upon thousands, dozens of thousands of them. I learned something in that moment. I said, this is the game. This is the game, and this is how it's played. That person was referred by somebody who worked at the company. You can tell people, hey, I think we're close. You might want to come check us out. And if you are the type of person who has that background, those skills, that reputation where you've done great things in your career, and I'm sure many people on this call are falling into that boat, you can find yourself in a situation where you don't ever have to work again. And I'm sure that's where our senior vice president of sales found themselves. So I learned something in that moment. But I want to continue on, and I want to say that research suggests that only about 9% of graduates from the nation's top computer science programs are from underrepresented minority groups, right? So close to 10% from the nation's top computer science programs. This is not even all of the computer science programs, but from the top. However, only 5% of the large tech firms are from one of these groups. Okay, and this is from a US Equal Employment Opportunity Commission report that was done around 2013, but the data is still very relevant. Additionally, in this report, and this is what it really comes down to, it's the crux of the problem, okay? You might hear many people, when you start doing research on this, you might hear many people say, oh, it's a pipeline issue. There's just not enough Black professional talent to fill all these engineering roles or all these roles in these tech companies. We're just struggling. But this report actually found that stereotyping and bias, often implicit and unconscious, has led to the underutilization of the available workforce. The result is an overwhelming dominance of white men and scant participation of African Americans and other racial minorities, Hispanics, and women in STEM and high-tech related occupations. So it's not us, right? It's not us. We're here. We're here. We have the skills. The data shows we have the skills. We have the will. The data shows that it's actually the industry that is excluding us. And often it's implicit and unconscious. So I'm not here to say that this is anything intentional, because I don't believe that it is. What I learned when I was at SingGrid, I noticed that as the company was growing, like I said, we started out with 150 people. And what I noticed was the company was growing, but the new people who came in didn't look like me. And one, what we call all hands, is when, if you're familiar with all hands meetings, everybody in the company comes together, the CEO gives an update, and you can ask questions. And I asked a question, and it really took some bravery on my part, because let me paint the picture for you. When I joined SendGrid, I was the only Black male in my office, the only Black male in my office. One of the very few Black professionals at the company overall. There was another Black female who worked in the same office as myself, and we had another office in California. And it just so happens that our CFO at the time was a Black male. He is now the CEO of DigitalOcean. His name is Yancey Spruill, a fantastic professional, and helped us get over that hump. But very few Black professionals at the company when I was there. And I raised the question during all hands. And that led me to reaching out to our people operations team. And I said, do you have a desire to address this issue? Because if you do, I will help you. Now, when the company is small like that, you can do that. I don't have to go through a bunch of bureaucratic red tape. I can go over to the next set of tables and laptops and start talking to the people operations team. Like, that's really cool that I could do that. But what I did was I said, look, you've got to start looking at these organizations. You've got to start looking at these fraternal organizations, these social groups. And I helped them develop a LinkedIn filter that they would have never been able to develop on their own. And what I found was, especially in Denver as a whole is only 10% Black, is that networking thing that I've been mentioning to you applies to every group of people. So if the people operations team is predominantly white and they've got to fill these roles relatively quickly as the company is growing, they're reaching out into their networks. Many of them may not know very many Black or Latin, Asian professionals in their network. So it just becomes easy to hire people that they know. So I approach this with that understanding and that empathy to be able to say, this isn't something intentional. A lot of the people operations teams just need help. They need people like you to go and start that conversation. They need people like us to help them, because I have discovered that there is a will to do it. It's not easy. They're going to have to put money into it. But we'll talk a little bit about this as I continue. I think there's an opportunity. I really do. I think that there's an opportunity for us to still, in large numbers, be able to participate in this wealth generating opportunity. Why do I think that? Because startups are founded often. I mean, technology isn't going anywhere, especially when you start thinking about artificial intelligence and machine learning and what companies are able to do with technology to reach a larger audience and bring products that more people love and adore. There are going to be companies that continue to pop up all over the world. And many of these companies, these tech companies, have increased their focus on diversity, equity, and inclusion. This is a quote by Larry Whiteside Jr., who's the president of the International Consortium of Minority Cybersecurity Professionals. He said, we've agreed that inclusion was a problem since at least 2013. And 2013 is when that report came out that I was mentioning to you earlier. But everyone was waiting for everyone else to do something. Social protests have forced the hands of companies, large and small, to take action. Quite simply, it's time. It's time. So in 2020, some of these larger companies developed more specific goals around diversity, equity, and inclusion. Facebook committed to a 30% increase in the number of people of color in leadership positions over the next 5 years, and will devote $200 million to support Black-owned businesses and organizations, which is part of a $1.1 billion investment in Black and diverse suppliers and communities in the US. Google pledged to spend $175 million to create more economic opportunities for Black businesses and job seekers, and has said it would bolster its number of Black employees and executives and work to improve representation at senior levels by 30% over the next 5 years. Microsoft said it was adding $150 million to its diversity and inclusion investment. Will double the number of Black and African American people managers, senior individual contributors, and senior leaders in the US by 2025. And Amazon just simply announced plans to double representation of Black VPs and directors in 2020 and 2021. The opportunity is here. These companies and others, and a lot of times what these larger companies do, the smaller, more mid-sized tech companies will follow as well. These people are trendsetters, these companies are trendsetters and leaders. So the time is now. I want to talk about some of the things that people operations teams and professionals can do. So first thing is, for people on this call who might work at a tech company, might be in the people operations organization, people on this call who work at a tech company and know someone, has a relationship with someone who works a part of the people operations team. These are some strategies that the people operations team at your company can do to improve the diversity, equity, and inclusion of the company. First, examine bias during the interview process. Okay. Examine bias during the interview process. Now, these are things you can have your people operations team work with other companies, work with other professionals and consultants, take tests to understand their biases that might be hindering the diversity of the company. Ensure the hiring committee represents diversity, right? People who are part of making these decisions should be a diverse group of people. Highlight your company's diverse culture through outreach. People are going to have to put some soldiers on the ground, participate in the diversity job fairs. The will just has to be there. And if it is there, Black professionals are just waiting to be included at these companies. Connect with organizations and meetup groups in your area that draw underrepresented candidates. This is a big one too. You should align with a recruitment partner that focuses on matching diverse employees with the companies who need their talents. But even more, even the recruiting partner that you might be working with to acquire talent, that company should also be a diverse company and also have stated in its mission, its values around and stance and standards around diversity, equity, and inclusion. And you should know your company's stance on all of these points. A company should also establish their diversity brand. And when I say establish their diversity brand, this is what I'm really talking about. So I work at Twilio. Now, I'm sure many of you have never heard of Twilio. If you have, fantastic. But Twilio is kind of one of those companies behind a bunch of other companies, and I'll tell you what I mean. And as a lot of tech companies are, which is kind of difficult, which makes it kind of difficult to understand or know what companies are actually tech startups and what aren't. It can be kind of a if you know type situation. But I guarantee you, Twilio is a part of probably your everyday life. If you've ever received a text message that came from your doctor, came from your dentist, came from your exercise company, that came from a company to remind you about something, an appointment coming up, or to engage with you. Hey, how was your first exercise session? Press 1 if you liked it, press 2 if you didn't. If you press 1, you get one response. If you press 2, you get another response. Twilio pioneered that technology, invented that technology. And that has launched Twilio into a huge stratosphere as far as what its stock price is worth, its value. It's been acquiring a lot of companies, but they have increased other companies and empowered other companies to engage with their customers. Now, I'm not here to just promote Twilio. Twilio is a fantastic company and we're always hiring. So I would love to see many people on this call apply to work at Twilio. Let me know, hey, I heard your presentation. I got hired today. That would be fantastic. But when I talk about diversity brand, I'm using Twilio because Twilio always talks about being an anti-racist company, but it's promoting that. So if you're the type of person where this is important, you want to work here. You want to learn more about the stance that these companies take. And so if you are a company and you don't have a page that explains your values around diversity, equity, and inclusion, then I highly encourage you to do so. And this just gives a little bit of information about what Twilio is about and their stance and why they're looking to be an anti-racist company and what they're actually doing about it. So I'm proud of the company I work for, and that's why I'm highlighting this, because our CEO has put his money where his mouth is. His name is Jeff Lawson. He's a really cool guy, by the way, and he's very, very liberal in his political views, and that may not be for everybody, but he's a great person. He hired a chief diversity, equity, and inclusion officer, and just allows this person to do what is necessary to help the company towards that goal of being an anti-racist company. And it'd be great to see more companies take this stance as well. So, and the last thing, and there are many strategies that a company can take. There are many strategies here, but the last thing I want to highlight here is just enhancing your employee referral program. If you already have, Black professionals at your company, then it's really good to reach out to this group of professionals and make sure that they know that you will support and encourage them to tap into their network and refer people for the positions that you have open. Tap into those networks and make sure that people are well compensated for referring people to close those roles. And if you're a professional on this call and you're looking for your next job, looking to make a move, something I've said has inspired you to want to join this industry, look no further. All right. Many of you have probably never heard of any of these companies. Some of you may have heard of some of them. Some may know all of them. I don't even know all of them. But I thought this was a really important slide of information to present to you. I've got early stage, mid stage, and late stage. Broken down this way is important because at each stage, that strike price starts to go up, okay? As the company becomes more, mid, late stage, starts to go public or may actually already be public, depending on the stage, the company becomes worth more, and the value for each of those incentive stock options starts to go up. So when I was working at SendGrid, it was, interesting, we could tell it was kind of interesting conversation to ask people, what was your strike price? What was your strike price? You could tell when they came into the company based off of what their strike price was, because they would announce the new strike price at, various times throughout before the company goes public. And information is shared very openly at a private company for those people who don't know that. But I will say this, that the people who want to have an opportunity to start acquiring the assets needed to build wealth just by working, have already taken a screenshot of this slide. I've already taken a screenshot of this slide. Some of you might have heard of Stripe. I know people at Gusto. Segment was actually acquired by Twilio. I work with Segment people right now. Snowflake is a technology that we use all the time, very, very large database and data warehousing technology. But it's kind of like if you know, you know. And so now you know now. I'm gonna leave this here for a few more seconds and hope that this changes somebody's life. And that's why I'm here. So I promised you, I said, imagine Tom, he's a billionaire. I said, I'm gonna tell you how Tom became a billionaire before the end of the presentation. And I did. Tom joined an early stage startup, got an outstanding strike price. Company went public. Tom performed well over the next few years and had a lot of incentive stock options and was immediately a millionaire. Then Tom, being a developer, decided to actually take everything he learned by working at this startup, and he actually built a product that customers love. All the networking and all of the information that was acquired and sitting in the rooms and talking to all of the executives who were very personable because the company's small, Tom learned a lot. Tom had the skills necessary to build an application, and before he knew it, Tom got help from an accelerator like Techstars and was now put in touch with venture capitalists and help with their business plan. And before you knew it, Tom had an application. He needed sales, he needed marketing, people operations. And Tom built a company because he knew how to do it and knew where to go to get the help to do it. And one day, Tom's application became a company and Tom went public. And at this point, Tom's not just getting a dozen thousand shares, he owns the company. And he has thousands upon thousands upon thousands of shares at a fantastic strike price because he owns the company. And that's how Tom became a billionaire. And that's what I want and believe that each and every one of us on this call has the opportunity to do. But it will not happen if we are not blitzing this industry by the thousands, in droves. I believe in us. I believe in the talent. And I want to express to you that these tech companies are beginning to see the value of diversity and inclusion as well. There are many numbers that suggest that companies that are more diverse perform better than companies that are not. And companies care about performing. And they need each and every last one of us on this call to do it. We should be on their websites. We should be submitting applications by the thousands so that they have no reason or excuse to say that pipeline is a problem. Pipeline is not the problem. But now's the opportunity. Will you join me in this opportunity? Blitz this industry. I appreciate your time. Thank you so much. And I believe now it's time for some questions and answers.
Yeah, so thank you, James, so much for leading this discussion and opening up our minds to the opportunities that come within the tech industry. Certainly in full. And as you said, hopefully individuals took a screenshot of that slide. And if you could go back for those who did not, they will get an opportunity to be able to take a screenshot, because it's definitely would be beneficial for those to be able to think about ways to generate wealth in some unconventional ways. It doesn't look like we have any questions in the Q&A panel. However, we did have some questions in the chat that I believe you could likely touch on directly with that person. So if you could just make a note of the question from that individual, you can likely touch bases with them directly to answer those questions. But this is your opportunity, ladies and gentlemen, to be able to ask any questions. We've been able to hear from James about wealth generating opportunities. If you do have any questions, please enter them into the Q&A panel, or you can raise your hand and we'll call on you to ask your question live. All right, it looks like we have a question. Let me get to the person. All right. You should be able to go ahead and ask your question, please.
Hello, good morning, James. This is Teiko Ari, and thank you for this great overview. It's really been a wealth of information for everyone who's listening. So my question on the VC side, because my background is finance, tech as well, starting off in industry. But from the VC side, I know of Angel.co, which is looking to sort of democratize finance and get funds to VC startups. Are there other VC firms similar to Angel.co that you're aware of that I can put on my radar?
I'm not, to be completely honest. It's really difficult to get some of the information around VCs. I don't have much information on, are you looking for like different venture capitalist organizations that are primarily focused on diversity or improving the amount of Black founders in the industry?
That would be where I'm looking to pivot towards.
Gotcha. I don't. I think they're probably pretty challenging to find, but maybe we can share information and I can get back to you on that.
Okay, welcome. Thank you for that.
Sure, no problem.
All right, thank you for that question. We have another question in the chat, James. It says, if given the opportunity, is it better to start a big tech company?
Is it better to start one?
Yes.
Was that the question?
Yes.
Yeah. If given the opportunity, is it better to start a big tech company? That's the question. Well, I mean, all these big tech companies start small. I think that if you were able to do that, that is a better path to greater wealth generation than just being an employee. As an employee, you will potentially get there if the company performs well, if you perform well, but you won't be the person holding the chips. And I'll explain it to you like this. When SendGrid went public, there were 3 founders at the company. And each of them at that point, once the company went public, was worth about $120 million a piece. I can tell you that Yancey Spruill, who became the CEO of DigitalOcean, and this is all public information, when they went public, he was immediately now worth $60+ billion, but that was with the company, the stock price for the company when it went public this year. As the company grows, that number will just continue to grow exponentially. And they're trading at about, I think, $47 a share or something like that. So he's the CEO, he's got to perform. But people who put the money into the company and people who actually founded the company are worth hundreds of millions, more than that. So you can get there as an employee, but if you can start a company, you'll get there bigger.
All right, thank you. We have time for one more question. Thank you to the person who asked that question. We're gonna go ahead and allow for another person to share their question. I believe you have the ability to ask your question now, please.
Okay, can you hear me?
Yes.
I asked the original question about if given the opportunity, not so much as to start your own company, but to start at a big company.
Yeah.
Should I take the opportunity to invest in a small tech company or just go straight for one of the top companies, Google, Microsoft, one of those?
I would go for the small company. I would, yeah, if it were me, I have several reasons why. And I kind of touched on them a little bit in the presentation. At a small company, the work that you do, Taffany, what's your career background?
Well, I've been working with the city of Chicago as a program analyst for shamefully 25 years now. So
There's
I've
no
probably been in
shame.
my role maybe too long.
Okay, no, there's no shame in that at all. And I think that experience, because people don't know about this industry, they don't understand where they fit into it. And what I try to tell people all the time is, you fit into it. Everything that you've learned over the last 25 years would be super helpful for a tech company that has 30 employees or 50 employees, and they're trying to figure out a way to mature their workforce and the organization. So when you come into a company like that, and you have 25 years of experience, it's not crazy to think that you would be able to come in, depending on your background and experience, to come in at a director level or something like that. Because these companies are so young, and a lot of times they're started by younger people and younger professionals. The culture is a little bit more liberal and fun. It can be really refreshing and revitalizing for someone who's worked at the same company for 25 years. So besides just the cultural value of what you would potentially gain by working at a company that's a smaller startup, there's also the incentive stock options that I talked to you about. But the impact that you see your work making when you join a big tech company, you're still probably going to be a bit of a number because they're really large, and the opportunity to acquire wealth is not going to be as substantial as it would be at a startup, because they're going to be throwing ISOs at you because they're not worth anything until they go public. And it's your opportunity to grab more of them if you really believe in the company. And you can find yourself becoming a multimillionaire. And I know people who've become multimillionaires pretty much overnight, because they were with the company for 7 or 8 years. They've been there so long and love their job, and the company went public. So the opportunity is just greater. Smaller company, smaller atmosphere, greater impact. I could keep going on, but my suggestion is I would go for the startup.
Great, thank you so much. I really appreciate that answer.
You're welcome.
All right, thank you for asking that question, Taffany. Thank you to all who have asked questions, excuse me. We're actually running so close to the end of time, we can't get to all of the questions. However, they are being noted so that James would have the opportunity to answer those questions more directly in contact with you. So do not be discouraged by your question not being asked live today. On behalf of BDPA, James, we would really like to sincerely thank you for your discussion here today, for imparting to us these words of wisdom as it relates to wealth generating opportunities that perhaps we haven't necessarily always thought about. We would like to thank you for investing in us the time to share these words of wisdom, and to thank you overall for all that you've done in the way of your presentation.
Thank you. Thank you all for listening. Thanks for having me. And I'm really excited about the possibility of seeing more Black professionals where I work and across this industry.